Okay, so how to buy and sell shares. Now, this is what I feel to be a really important topic. It's a tool with which we can promote financial inclusion, financial education. Um, the buying and selling of shares really is capable of contributing to economic well-being of all people, of all citizens. So buying shares, I feel, is a great wealth building tool. It's an excellent investment to make for individuals. It's not just something for the rich and powerful. The ordinary citizen can start with even 100 Rand and invest in shares. So I'm going to divide this little chat into four topics. We are first going to look at what are shares. Secondly, we're going to speak about why we should be buying shares. So, what are some of the reasons why it's a good investment? And thirdly, we're going to briefly talk about the types of shares that can be bought in South Africa. And finally, we will speak about what you as an investor need to do to buy and sell shares and to have shares as part of your investment portfolio. So, what are shares? Firstly, it's really important to have a basic understanding of what you are buying before you go out and buy it. So, what are shares? They are rights. Shares are rights that a shareholder has against a company, and they are legal and enforceable rights. There are several rights that a shareholder has. For the individual investor, I would say that the most important rights are the following. Firstly, a shareholder has the right of participation in the business of the company in which you hold shares. How do you participate in a company's business? Well, with your share, you have voting rights. You have the right to cast your vote and to make your voice heard. There are several transactions that shareholders need to approve before a company can enter into it. Um, Even the amount that directors are remunerated for their service, that needs to be approved by a shareholder resolution. Now, a shareholder resolution is a decision, and the way shareholders pass a resolution is by voting. There are also other participation rights. So, a shareholder has the right to ask questions of the board of directors at the company's annual general meeting, the AGM. Shareholders also have the right to access company information like the securities register. Those are all participation rights. The next couple of rights are probably more important for the individual, and these are economic or financial benefits of shares. So, secondly, a shareholder has the right to share in dividends when the company declares a dividend. So, the the company is entitled to distribute its assets by making payments to the shareholders. Effectively, these payments are a reward to shareholders. Those are called dividends. Um, and dividends usually would be in the form of cash. The company makes cash payments to the shareholders. So that is a financial benefit and a right of shareholders. Then the third one is shareholders have the right to sell their shares. That simply flows from the fact that shares are assets, assets just like a house or a car. Therefore, the shareholder has the right to sell those assets. Um, and the fact that it's an asset is um, also means that a shareholder's shares are part of his estate. And since they're part of his estate, the shareholder will be entitled to bequeath and to distribute those shares to his beneficiaries when the shareholder dies. So, and that's another reason why I say that buying shares are a good long-term investment for your children, even for your grandchildren. The idea is that holding shares for the long term, maybe selling it in 50 years' time instead of a week's time, that can really contribute to building intergenerational wealth. So those are some of the share rights. The next question is why to buy shares? What are some of the benefits of buying shares? There are several benefits. The most important um, two strategies are, firstly, you can buy shares for investment purposes. That would be, if you are an investor, then you are buying shares for the long term, and your objective is to buy, hopefully at a good price, and to hold those shares for 10, 20, maybe 50 years. And the idea is that as the price of the share increases over time, um, the value of your estate and your wealth will also gradually increase over time. And the investor, he will also, over those 20 years, take advantage of the dividends that are declared. So for the investor, having shares is a long-term goal. It is part of having several assets as investments that will hopefully grow over time and hopefully beat inflation as well. So that's one strategy. You can be a long-term investor. Then you can also be a trader, and you can commit to trading shares. And this is the practice of buying for the short term. So the goal is not to hold shares for years. If you are a trader, you are looking, or you are trying to benefit from daily or short-term price movements. You're trying to buy low today and hopefully sell high tomorrow. Um, and that's a very difficult skill to be able to do that successfully and to make a decent profit. Um, so I would say for the individual just starting out, he should probably try to be an investor and not a trader. Only once you probably have a lot more knowledge of how things work, should you try to beat the market by trading. But those are a couple of the main motivations or strategies for buying shares. The next question is, what shares can you buy? Um, Broadly, there are two types of shares you can buy in South Africa. You could either buy listed shares or unlisted shares. Listed shares are shares that are for sale or that you can buy on the Johannesburg Stock Exchange or the JSE. The JSE is simply a marketplace which brings together buyers and sellers of shares, and the JSE creates um, a functional and regulated market. You'll find that companies that are listed or have their shares listed on the JSE, those would always be the big businesses, the multinational corporations, Naspers, the likes of MTN and Capitec, the big banks. They are all or they have their shares listed on the JSE. So if you want to buy the big companies, you need to be looking at buying listed shares. Then you can also buy unlisted shares. Obviously, these shares are not traded on the JSE. They are simply traded among private individuals. These would usually be smaller private businesses that 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 are unlisted. So that's also an option, listed or unlisted. Then the final question, how to buy and sell shares. Once again, there are a couple of ways. Take note that sometimes, especially when starting out, a company can issue shares to the market. These would be new shares that the company is inviting the public to buy. So you could buy shares from the company itself when the company makes an offer of its shares for sale. The most common way, however, of acquiring shares would be to buy shares from an existing shareholder. So let's speak about how exactly you would buy from an existing shareholder. It's slightly different for unlisted and unlisted shares. For unlisted shares, remember there is no organized market, which means that you need to enter into a private transaction. You need to contract with either the company or the existing shareholder, and you can buy the shares that way. Now, the listed environment is a lot more highly regulated. There is a big requirement when you want to buy listed shares, and that is that you must have a broker. You must have a stockbroker that acts on your behalf. You cannot buy listed shares in your own name. You could do it with unlisted shares, but the JSE requires you to have a stockbroker. Now, a stockbroker would simply be your agent. As the individual investor, the stockbroker is your agent and must comply with your instructions. So if you tell your stockbroker to buy shares in Naspers, then the stockbroker must execute that instruction. Okay, but then we can break it down further. Now we know we need a broker to buy JSE shares or listed shares, but there are another couple of ways or two ways in which to do it. Firstly, you could buy shares indirectly. Now, this is a very popular, very economical way to get exposure to shares, and that is through buying into unit trusts. A unit trust fund is a collective investment. You can compare this to a stokvel, where hundreds of investors give money to the unit trust fund, and the fund manager then invests that money into various types of assets for the benefit of the clients. Now, a very popular asset that unit trusts buy is shares. So effectively, when you buy unit trusts, the fund will purchase shares for the fund, and that indirectly gives you exposure to that company's share performance. Now, using unit trust can be beneficial, like I mentioned, because you take advantage of the expertise that the fund managers have. They have a lot more knowledge about which shares are good to buy and when to buy them. The fund will also invest in not just one share, but up to hundreds of shares at the time. So you would be very diversified if you buy into unit trusts. Now, if you have a pension fund, then you already have exposure to shares because pension funds buy unit trusts, and as I mentioned, unit trusts buy shares. So you could, if you do not have a pension fund, you could sign up for a retirement annuity, or you could buy unit trust funds directly from the unit trust provider. So there are very many asset managers that would be able to buy unit trusts on your behalf. I'm thinking of the likes of Coronation, Allan Gray, PSG. Signia is a very popular one at the moment because Signia have funds that are very low cost and that also perform quite well. So Have a look at Signia and then Discovery, and the big banks also would be able to assist you. What do you need as a practical matter? What would you need if you want to invest into unit trusts? Well, it's quite simple. You need rands, so you need cash. Obviously, you would need to provide cash to the fund with which they could buy shares. But in order to open the account, you need your FICA documents. You need to be over 18 and you need to send your FICA documents. That would be your ID and your proof of address. That is what is needed to open your unit trust account. So buying through a unit trust could be regarded as safer, but then the disadvantage is that you lose control um, over what you buy. The fund manager would be entitled to buy and sell, and you would lose that ultimate control. But if you want um, that close control, and if you want to yourself manage your portfolio, your share portfolio, then you can directly buy shares. Once again, you need a broker to buy listed shares, but you can open um, your own individual account with the stockbroker, and then you yourself would be responsible for choosing which shares to buy and how many. Then you would also have to decide when to sell. So that is also an option. You could contact one of the big stockbrokers, and once again, there are several. The big banks would all have a share buying platform. Easyequities.co.za is very popular, once again, for its low costs. Then Capitec and PSG could also assist as a broker. How would you start and what would you need? Once you have decided you are ready to invest in shares, you can contact your chosen broker, complete the application forms, and then open an account. Once again, you would need to provide your FICA documentation. Once you have your account, you then invest your rands, you transfer rands into the account, and then with those rands, you can transact on your broker's online platform. Yes, so I would think that all stockbrokers now have some type of online platform where you can buy and sell shares from the comfort of your home, in front of your laptop, simply by clicking um, buy or sell, as the case may be. Um, I will not address the question as to which shares you should buy. There's a lot of advice and information online that you can read. And often your stockbroker will also provide some tips and guidance regarding buying and selling shares. Before I conclude, there are a couple of things to take note of that I want to emphasize. Before you go out and buying shares, it's important to know the following. First of all, buying shares is not, or generally speaking, buying shares is not a get-rich-quick scheme. You will not receive outstanding performance instantly from buying shares. That's not, generally, that's not how shares grow. Shares grow slowly and hopefully steadily. And shares can grow quite well, but it will not double your money overnight unless you are very lucky or very skillful. The reality is that it's probably best to view shares as a long-term investment. You will not, it would be very difficult to generate income from buying shares on its own. Another thing to take note of, buying and selling shares comes with risk. there is a risk to your personal estate. Why? Because share prices can rise, and that's good, but share prices can also go down. That would be bad if you own shares. So you could find yourself in a situation where you buy shares today, it's worth 1,000 Rand, but tomorrow the shares are worth 900 Rand. That is completely possible because prices rise and prices fall. Hopefully, over the long term, shares prices will rise, but there is a definite risk that individual investors must take note of before they commit their money to this asset class. And the final thing to remember, and this is really important um, because it's something that we as investors can control, and that is costs. You need to be aware of the costs that go hand in hand with buying and selling shares. Um, there are a couple. So the first cost would be your fee or your platform fee. So the brokers would usually charge you some type of fee for transacting on their account or transacting using the online platform or the online service. There are some brokers that do not charge for platform fee. So, um, and this is why I say costs are the only thing we can control. We can't control which way the market is going to move. What we can control as individuals is how much we are paying to be invested. There are some brokers that will not charge a platform fee. So one that I can think of is Easy Equities. That is a broker that does not charge a platform fee. So that's quite handy. The next cost you need to take consideration of is every time you buy and sell shares, the stockbroker gets commission. This would be the stockbroker's slice of every transaction. So it's usually a percentage of the trade. And once again, Easy Equities is known for its low broker commission fees. There are some tax implications of buying shares, but either way, there's not much you can do about that. What you can control is the fees you pay to your broker, the platform fees and the broker's commission. Look out for the cheapest you can find. Okay. So the final advice I can give you if you are starting out is to look for low cost providers and to also purchase low cost unit trust funds. I would encourage you to Google low cost index funds South Africa. That um, should result in a few hits of firms that really take costs seriously and try to generate business by cutting costs. Another tip I can give you is that, for instance, Easy Equities does this, but I know other brokers also do it. They will provide a demo account or a demonstration account where you can, they give you a virtual amount of money and you can start buying and selling shares just to get a feel of what to expect before you invest real money. So if you are feeling a bit hesitant, start with a demo account. And my final bit of advice is to view buying shares as a long-term investment. Like I said, it's very difficult to make a profit over the short term, but as a tool of growing your wealth gradually over time, buying shares is a good option.